Financial Planner, follow us on YouTube.
Lynette Zang, thanks for coming on the show with me today. Well, let's start off with Europe. As the turn of events are unfolding, we have European junk bonds yielding right now, in some cases, even lower than comparable maturities to U.S. 10-year treasuries. Of course, due to distortions unleashed by Mario Draghi's corporate bond buying program. So let's just start there. What does this mean?
Well, for one thing, I think you should expand that. It's global central banks bond buying that they're doing. And I understand that Draghi is buying corporate bonds as well. But the 10-year treasury is the bedrock of the financial system. So what's really going on is that the system is breaking down, and they're trying everything they can to create that inflation, because inflation creates that nominal confusion. If things look like they're going up, then people think, oh, everything is fine. If my house is going up, I must have more money. If the stock markets are going up. So as the yields drop on those junk bonds, obviously the prices of them go up, because that's how bonds work. But what's really happening is that all of these extraordinary measures are not working. That's what's really happening.
So we have a lot of extraordinary measures not working and a lot of confusion out there, but it's so crazy that these junk bonds are now lower than the U.S. Treasury, which is, like you said, the bedrock. And how long can something like that, something so distorted, and something that I like to say is, the free market is very natural. It's like a water flowing down a mountain. There's only so much you can do to get in the way of that river. And I liken it to the central banks now trying to push that water back up the mountain. And how much longer can they do this? Can they push that water up this mountain and attempt to contain it?
Well, I feel that we're in the melt up part of this trend cycle, because you're exactly right. They are trying to push water up a mountain, and it can work as long as they're the ones that create the liquidity to try and push it, kind of like a fire hose. But this is really what's happening with those treasury bonds. And it's not so much the yield, because there is no good price discovery in any of these markets. These are not free markets. In a normal free market, prices go up when demand goes up. In these markets, demand is not there and prices are going up. So there is no good price discovery in these markets. They are really fragile. And, we talked about Venezuela, but, seriously, this is the VIX on the 10-year treasury, and it's really clear. Over here, they just started showing this in 2003. And can you see those dashes? I don't know how easy it is to see. But over here, you've got a dashed line, which means easy price discovery. Once we hit 2008, now you have lines, no more dashes, and that's when the central banks put us on life support. So you can see the foundation of the system. But this is when they allowed traders to take over. And, how long can that last? If that was an EKG, how long can the patient be in that condition? I don't know. They've been working furiously since 2008 to reposition the next money standard. And, frankly, I think we're almost there for sure.
Well, we are bearing witness.
I just had another thought on the on that question with the junk bonds in Europe being at the same level or even lower. Okay, maybe that's an indication that it's all junk.
Well, and I totally agree with that. And the way I feel is that the whole world is just stuck with what we have. We don't, to a large degree, have choices, or at least the mainstream conventional wisdom doesn't believe they have choices. And personally, I believe that gold and silver are obvious choices, but to a large degree, we aren't seeing many people buy into that. And to a certain degree, I think even Bitcoin is finding its way into this free market of where money wants to flow. But before we get into this, we are bearing witness to the results of distorting the free market. And right now, that's in Venezuela. And this has not just been the crisis story of the week. This has been a serious, long-lasting thing to the point where citizens cannot get access to basic needs. So if you could give us some insight on the country's disconnect and, really how they got to where they were today.
Well, it's pretty typical where we all are getting to where we are today is meddling by the central banks and governments to usurp more and more. But it really is about purchasing power of the fiat money. People don't realize this because, again, nominal confusion, where if you had, and let me just explain that so I can make that clear, but it's a function of fiat money, because if you had $20 20 years ago and you still have a $20 bill today, to you it's a $20 bill. But what that $20 bill buys you is a whole lot less. So it's about perception management. And the real problem is really that all currencies' value, their purchasing power, has dramatically declined by design. That's the inflation that they keep saying is so good for us. But there is officially only 4 cents left out of the original purchasing power in the dollar. And it's the same thing in Venezuela. It's the same thing in Europe. It's the same thing everywhere, because every single currency is fiat. And fiat, by decree, is based upon a debt system. So when you have so much debt that your income goes toward just paying the interest on the debt, then how do you actually really stimulate the economy and create that savings? So that's by design, whether it's in Venezuela or any place else. But you made a really interesting comment, and this is the Venezuelan stock market in 2013, it was the best performing stock market in the world. But they confiscated monetary gold from the citizens back in 2011. Up to that point, it was roughly 169 bolivars for an ounce of gold. So here they're touting how wonderful it is. People didn't think they had any choice. Well, they didn't, because after 2011, they couldn't buy gold. They couldn't buy monetary gold anyway. So look at the stock market. Isn't that great? But look at this big drop off. That's because there's no liquidity on the other side. And our Treasury Department has been talking about the lack of liquidity since 2013. Wow. So this is an example of where we are. And now they're in hyperinflation, where the markets are really driving the value, the real value of gold. But it's not, here it is. Okay. This is gold in terms of bolivars, 169-ish, give or take, up until 2011. And then that's when the hyperinflation kicked in. It's higher than this now. So there's your hockey stick. It's not really gold going up. It's that the gold is holding the purchasing power. And this is what we're coming to, because that's how a reset of the system occurs. They have to get rid of all of the debt, reset all of the debt. And so they take that fiat money that has no value and they revalue it against hard money, real money, gold. And that's when gold expresses to its true value, which in terms of bolivars at this point is somewhere, I think it's higher than this, but on the day that I pulled this, June 28th, it was 10 million bolivars for an ounce of gold.
Wow.
Okay, that only sounds like, wow, what that really means is the bolivar can't buy anything. It has more value as a napkin for an empanada, and that's where all fiat money's headed.
Well, I know that you've done some research in terms of what sort of debt the U.S. is in and what that would look like if gold was revalued to the U.S. debt. So if you wouldn't mind, let's transition over to that direction.
Okay, well, we could go there for sure. Okay, so the way in the current system, money is created from debt. We know this, all right? And so the way that I come to the valuation on gold, it's actually pretty simple, and anybody can do it if they go to the debt clock and they pull the debt. Now, mind you, at the debt clock, this is just the public debt. According to the IMF, the real total debt is roughly 3 times what the debt clock will show. Okay. In addition, this does not take into account any of the derivatives in the system, which actually leverage that debt even more. Now, so there's an infinite amount of debt. And as long as there's confidence, as long as they have computers, they can push a button, that's what's going to happen. But there is a finite amount of gold. And it doesn't matter whether it's in the ground or above ground, and it doesn't matter where it is. So if you divide all of the debt by all of the gold, so this has complete intrinsic value because it's used across the entire swatch of the economy. This has no intrinsic value because it's only used in one place. So if you divide this by that, when I did this, it was close to 9,000. Now it's more like 9,300. And so that's if they reset the debt today, and I believe it to be an extremely conservative number, simply because it doesn't take into account all of the debt, it doesn't take into account all of the promises, and it doesn't take into account all of the derivatives. So that would be a minimum for me. And then you would be a pariah.
I would be considered a pariah if I was to suggest that the U.S. would do what Venezuela is doing and go down that direction. And in many ways, I am. And my question is it possible for the U.S. to do that on its own, or are we going to have to see a global collapse happen? Because at this point, the U.S. is, and we've heard this before, the cleanest shirt in a basket of dirty laundry. But really, that whole laundry basket needs to get washed, right? So
yes.
How does that work?
Well, for one thing, yes, we can do it here, and it can be done in individual countries. But I also think that what we're looking at is a global system reset, because that's what the IMF is calling for. And the reason, I mean, I don't know, the cleanest shirt, and I can't even go there, because what you're looking at here is this is a debt-based system. We hit peak debt in 97. So that means that we already lost the ability to stimulate the economy by growing debt in 97. And ever since then, no matter how much debt we've grown, you can see the results. The economy is not being stimulated. What this is, just to clarify, is this is the monetary velocity, or the number of times that money changes hands. And it indicates whether or not money, or how money is flowing through the system, and it's worse than it was during the Depression. So there is only one way, not a bunch of ways, one way to battle this, to fight this deflation. This is really what this is showing you, and that's with inflation. Now, do you really think that they can keep full control of inflation? I don't think so.
I personally don't, but they do what they can to control the narrative, and they do that with
the narrative.
Stock market hitting new highs, right? But I suppose that could be the trigger point. If they lose that propaganda, the ability to control the narrative, it could set off a firestorm of events.
Well, yes, because it's all about confidence. Any con game requires confidence. That's why they test confidence all the time. But, you know, they've already hyperinflated the currency. This is the monetary base. QE 1, 2, 3. I mean, this is a hyperinflationary pattern. This is them buying treasuries. This is a hyperinflationary pattern. This is them buying mortgage-backed securities. This is a hyperinflationary pattern. The only reason why we haven't experienced hyperinflation in Main Street is because this money is still being held in the banks that they're paying them to hold excess reserves, which they never did prior to 2008. So much as they say they want them to lend, that's actually what they wanted them to do is store that money so that I think, I can't prove this one, but I believe that at some point in here, they will release that in there, and all of this hyperinflation that is sitting in the stock market right now, and in the bond market, and in the real estate market, and in the derivative market, will come to Main Street, and will be Venezuela. I mean, it is really simple.
Yeah, Lynette, and some of these things we're talking about could have been said months ago and maybe even a year ago or so. But what we're seeing right now with the US dollar is quite a free fall. On the DXY, it was 103, now down to the 93 range. And if you look at a chart, there's not much support between 93 and 80. And that is kind of interesting to me. And I just wanted to get your thoughts on that before we shift gears here.
Well, what you're really talking about, and I have a few thoughts on that. Number one, what you're talking about is the dollar against a fiat dollar against a basket of other fiat currencies. So for me, it's the purchasing power that's more important because that determines what you can buy when you go to the grocery store. Okay, so that's number one. Number two, look at all of the debt that was taken out by the oil producing nations and by other countries in terms of dollars. And then the dollar got so strong that they were in jeopardy, or, well, there were a lot of defaults, but they were also in jeopardy of more defaults. So they needed to reduce the value of the dollar against those other fiat currencies so that they stopped the defaults. And so that is really why you're seeing the dollar decline. It's all, dare I say it, because I can't, well, actually I can prove this, so I will say it. All currencies are manipulated. When one country points a finger at another country and says, oh, China, you're manipulating your currency, guess what? They're all manipulated. And yes, there's lots of proof on that. They manage their currencies. So I'm very certain that that's what it's about. It's trying to postpone this because they don't have the next money standard fully in place, although it's getting close. It's getting very close.
Well, I'd like to actually shift gears into the next money standard, and I get your comments on cryptocurrencies. Now, I tend to like Bitcoin, and I believe it's one of the honest cryptocurrencies out there, decentralized and uncontrolled, kind of a real free market alternative. But I could definitely see how bankers could attempt to rejigger their own and capitalize on this crypto craze and controlling something that the free market is seemingly welcoming.
Well, I'd like to go back to that, and I'd like to show you this image that I pulled from ACC Chain, and it uses Bitcoin and Ethereum because those are the two most popular cryptocurrencies that those are the only two at this juncture that can convert into ACC, which is a brand new coin token that was created to hold the title to real hard assets. But between that and that, marrying those two, guess what? It turns into an SDR. So can you please explain to me, if it's so free and open, why it would be converted into an SDR token?
Oh, well, I'm not disagreeing that it won't go into something that could be controlled, but Bitcoin itself is not something that's controlled or pre-mined. I know that a lot of these different alternative currencies, they're pre-mined, there's centralized control, they own the majority of them, and they're able to manipulate them. But redirecting Bitcoins into something else, I'm still not sure that's exactly controlling Bitcoin.
Once it gets married to this, then it is in a controlled environment and it circulates into the node and everything goes into the SDR. And I've been saying for many, many years, and that's because, well, first of all, the SDR was created back in '69 to take over as the world reserve currency. So it's been around since '69 when we shifted the money standard from a gold standard to a debt standard then. China called for it. China's spearheading this shift. And, you know, I mean, they are allowing globally, they're allowing the popularity of the digital currencies because they want us out of cash. And when it's in cyberspace, it's anonymous. Right? And our perception, it's perception management. Our perception is that it's free and that it's open and that they can't control it. Did you not see China shut them down? Not that long ago. Now they're embracing them. Why did they shut them down, you know, a year ago, and now they're best friends? And not only that, marrying Octane. So, I mean, I may not know that much about cryptocurrencies. I'm learning. I'm doing my best to understand this and learn as quickly as I can, but I do know central banks because I've been studying them for an awful lot of years. And there is no way on God's green earth that any central bank or government will give up their money monopoly. Not unless it's pulled out of their hands. And they're sure not going to let a computer algorithm do that. They figured out, they've been pouring a ton of money into this. Corporations, banks, central banks, governments. So, yeah. And when there's no more use of Bitcoin, I think it's going away.
They need to control this. They know that it's happening because, 2011, monopoly money. That's how people perceived it. But really in 2017, with the massive price movements we've seen and, you know, now over $100 billion market cap, this isn't going to stop. So I can definitely see how they're going to want to at least position themselves to control it because it's a huge competitor to the fiat currency system. I know Andy Hoffman talks about it as one of the twin destroyers of the fiat currency system regime, you know, gold and Bitcoin.
What do you think? What do you think Bitcoin is? It's not fiat because they haven't exactly legalized it yet. And fiat means decree, but it's not real. They say they want you to think of it like it's gold, so they talk about mining it, but you and I can't go out and mine it. We can't go pan for Bitcoins. So the ability to mine any of the cryptocurrencies is held in a few places, and they even talk about that here. These nodes are limited. The nodes are limited. So
we're talking about another coin though. Bitcoin itself, it was designed a very certain way.
Yes, and it just hit a fork, didn't it?
It absolutely did.
Okay, so what does that mean? That means that the limited number of coins that they said were going to be there, and what is it? It's Ether anyway. Now there's twice as many. And as you pointed out, the ICO market, initial coin offering market, has been exploding. And the regulations, you know, in this country, it's only marginally different. And if you read the reports from the CFTC, they want a hands-off, they're taking a hands-off approach. The CFTC is anyway. We just decided to regulate them like a security. I'm sure there are lots of reasons for that. But on a global basis, it benefits the central bankers to get rid of the cash because then they can go as far below zero and attack your principal. I mean, there's no purchasing power left. So they've got to now go after your principal. They don't want you to own anything. So, I could be wrong. I don't know. You probably maybe know a lot more about Bitcoin than I do. That's a possibility, but it makes me feel a little creepy when I see the two most popular coins, Bitcoin and Ethereum, as the foundation. I don't think I have that, but as the foundation for the SDR token. And I got to ask why.
Well, I mean, and I'm not a technical expert either, but that's how all of these cryptocurrency, all these altcoins they go on top of Ethereum or Bitcoin, but they become their own token.
Well, that's not what they're saying here. What they're saying here is that this combined with this makes this. That's what they're saying. And the SDR would be controlled only by the IMF.
Okay. Well, you know what? I actually, I'm not that familiar with it, and I appreciate the knowledge on it. It's something I'm going to look into more. But I totally agree with you in the fact that I believe that they are going to do what they can to control, going back to that, controlling the narrative, controlling the scene, and specifically when it's all said and done, controlling the money supply. And I find it very interesting that they're having to, and I feel like they're having to do this, not that they had planned this originally. I feel like they're having to use cryptocurrencies because it's something that was just completely came out of nowhere. And that's just my opinion. I don't believe that.
Right. I'm gonna put the link on, because I should have put it on to the piece that I did on Tuesday. But actually, there is a piece that the IMF published in 2011 on the SDR and enhancing its role in the international monetary system, et cetera, where they talk about digitizing it by turning it into a digital currency. So actually, this is all planned. Actually, it all is.
But were they talking about blockchain?
Well, they were not necessarily. They were talking about a digital currency. Did they mention blockchain in that? No. I've read that report several times, but no. So, but they did talk about getting rid of cash. And what you need to understand is that this ACC coin is about holding title to tangibles. This is all about gathering information or gathering titles on tangibles. They'll let the banks do the stocks and the bonds, but the tangibles, they want the IMF. And so that's far more than just the monetary system.
Yeah.
That's turning tangibles into coinage. Well, digital coinage, but coinage.
Sure.